Well, with that, let's dive straight in and talk about the retail trends that we're picking up. We've got, of course, quarterly numbers to report, to look at as well, and, of course, the overall environment. V-Mart Retail reported a pretty strong performance for the third quarter. There was sharp expansion in margins due to operating leverage. To talk about this and to give us an outlook, we have with us Anand Agarwal, CFO at V-Mart Retail. Thanks very much, Mr. Agarwal, for joining in. So I want to start right here. Top line growth of about 15.5%. Your margins have improved to about 16.7%. Let's talk about this. Is this growth coming, from the rural segment, tier 2, tier 3, or are you seeing some improvement in the urban demand as well? And what are the SSG trends that you can maybe extrapolate from the third quarter into the future?
Hi, Surbhi. So, yes, I think the performance has been pretty much robust all around. So it's not just the urban markets, but also the rural markets, which have done quite well for us. We present more in tier 2, tier 3 towns, and that is where the bulk of our operations are. And that is where we are seeing a lot of revival in demand. I think last 2-3 years have been pretty bad in terms of the rural recovery. But for the last, I think, 9 to 12 months, we are seeing strong signs of revival. So we are growing in almost all the geographies. There is strong momentum coming in from north and strong momentum also in the south. East has been slightly softer this quarter, but otherwise on a like-to-like basis, on a same-store sales growth basis, we grew at almost 10% across all the regions. So going forward, also, I believe that we should be able to maintain this growth momentum, and the like-to-like sales growth should remain in high single digit for the quarter 4 as well.
High single digits for quarter 4, which means on a full year basis, you will end same-store sales growth in double digits for sure, right? Because I think 9 months you're already at 12%. So this is not just a festive season-led bump up in Q3. You're expecting this to continue, going forward as well?
Yeah, that's correct. I think that's also a lot to do with a lot of changes that we have been doing in our own internal functioning in terms of efficiency improvement, in terms of how we source, how we select the product, how we design the products, and a lot of that is playing into also the tailwinds that we are getting from the markets. So there is a revival in the market, definitely. And there is also a lot of work that we have been doing, which is, yielding us results. And that's why I remain hopeful and optimistic on the road ahead.
So full year SSG, should we say, should be at least, 12-13% in that range?
That's a calculation, yes. So high single digit for quarter 4. And I think the full year average should definitely be, double digits.
Right. Just margins, Mr. Agarwal. Hi, morning, Prashant here. What are target margins you're looking at? And when will Unlimited's margins meet that of V-Mart?
So Unlimited, Prashant, has already, come to a very respectable level. In fact, the margins in Unlimited for this quarter were almost at par or slightly higher than even V-Mart. And that's probably happening because of a very calculated strategy wherein we are opening more number of stores in South India in a similar and exactly the same format as that of V-Mart. And that's a proven model that has worked for us in rest of India, and that is working very well for us in South as well. So all the new stores that we are opening in South are giving us very good margins, and therefore, as an average, the Unlimited chain, therefore, is coming almost now at par. Should come at par on a full year basis also in the next year.
Overall margin, Mr. Agarwal, what's the target?
I think we should still be, looking at around 12% or so EBITDA margins.
Okay, 12% EBITDA margins. LimeRoad acquisition, how far is the turnaround?
LimeRoad is still in a recovery phase. We're still trying to use and leverage that platform for more shifting the customer easiness and providing our own V-Mart customers as well as Unlimited customers are more easier access to bigger catalog. So the strategy there has been to cut down on the marketing spends and thereby improve profitability or improve the losses there, and source a lot of customer traffic from the existing and probable offline customer base. So I think we will still have little amount of losses in LimeRoad, but LimeRoad will still remain a small but an integral part of the overall network.
Okay, got it. So it's been good going for you, not just in Q3, so far in the fiscal, and you're sounding optimistic. And imagine this is without the personal income tax bonanza. So what happens from here on is the question. And to talk about this, we have another guest joining in. We have with us Akash Agarwal, whole-time director at V2 Retail as well. Akash, so that question to you. I think tier 2 or rural has not really been the problem. A lot of retailers, consumer companies are talking about the urban slowdown. To what extent do you think will this help your operations, this personal income tax cut?
So about 80 to 90% of our stores are in tier 2 and tier 3 towns. So that's where the bulk of our revenues come from. But there had been pressure both in rural and urban. So we welcome this move, and there was an urgent need for some kind of stimuli to boost customer demand and spending power. So I think it's a step in the right direction, and it has the potential to create some sort of ripple effect across the economy. Because when you have higher disposable income, it should stimulate consumption, and then ultimately it should fuel business growth. And hopefully it leads to a multiplier effect on employment and investment.
Got it. Gentlemen, of course, the whole idea about fast fashion or the tier 2, tier 3 category that you both have told us about is that to keep prices stable. And that's how volumes continue to fly off, right? So I want to get a sense on pricing from here on, and also the disruption that the industry perhaps will look at. Because from the online perspective, we have Shein now coming in, along with Geo, and we saw that disruptive impact play out on the trend stock just yesterday in the market. The market's wondering which way this will go. So Akash, again, that question to you. While the underlying demand continues to be strong, maybe will get stronger because of this income tax cut, what about price elasticity in the market? What about competition in the market, which is only heating up?
So talking specifically about Shein, I think it's an online-only model. And the pricing strategies and the average selling prices are very different than our business model. So what we focus on is strengthening our value proposition and ensuring that our customers get the latest trends. So I don't think they are in direct competition to us, or they might affect us significantly in a way. But there's always welcome for new players in the value fashion market, and I think it's good for the overall business and the market. Because people are focusing more on value fashion these days, as people look for affordable clothing, and even the frequency of purchases have been increasing. So I think it's good for the overall sector.
No, absolutely. I mean, and the thing is, the digital medium is also really catching up. Mr. Agarwal, your thoughts on this? I'm not sure if you're exactly in sort of what products would you be almost like competition with something like a Zudio. But there is a big challenger coming now in the online space, and a lot of your value-conscious customers are also checking prices online and looking at options online. So what do you think lies ahead in terms of the pricing elbow room that you may have?
I think, Surbhi, I fully resonate with what Akash said. And see, competition is always good for the market. And it also helps us, improve our own way of operations and looking at what best we can offer more to the customer. In any case, the product segment and the customer segment that we target is slightly different from the pure online segment. The core, customer base that the typical value retailers of tier 2, tier 3 towns have a slightly different taste. And we specialize in making sure that we are able to provide that kind of merchandise to that customer who has to make an investment decision. It's not just a buying decision for a pair of jeans or a top. It's more of an investment decision. Our experiences, despite being an online retailer as well for the last 4 years, the offline customer behaves very, very differently. But at the same time, we remain very optimistic on the entry of more competition. We've always had a lot of competition in the value retail segment. And it's not just the online retailers who are eyeing India for online entry, but it's also a lot of conglomerates which have beefed up their presence in the value retail space. And, even with all of this, I think still the unorganized market occupies almost 80% of the Indian retail apparel market. So there's a lot of room for growth for all of us. And I think if we pull up our socks, we do our strategy well, we should have enough room to play in.
Absolutely. And what we know right now is that, Shein will have mostly an online presence. And there's something very nice about going offline, walking into a store, trying on the attire and then making your purchase decision. So that's always, a plus. Thank you very much, both of you, for joining in and taking us through the trends in terms of consumer retail in the third quarter.